What is going on, everybody? And in this video, I'm providing you a state of the market and stock picks for May 17th, 2023. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So another, I wouldn't say flat day. There was a lot of pressure towards the end of the day as Biden essentially said that he was going to go talk to the press, and then only to find out that we haven't come to a solution on the debt crisis. Nonetheless, this I'm going to give my 100% honest opinion on this thing. Uh, we are not going to default, right? There is way too many people heavily invested in the US dollar to think that we're just going to default. Someone will come out of the woodworks and essentially bail us out some way, somehow. That's not saying that we cannot get downgraded. That is something that's happened to us before. I believe it was 2011 when that last happened. I believe that could happen depending on how close to the chest that we do play this. So with that being said, we are heavily kind of weighing on what is currently going on aside from the debt crisis. I am focusing heavily on lots of talk of recession. We did have Home Depot report this morning. They did okay, but revenues took, I think it was about a 4% drop. But what was worst of all was they're projecting a 7 to 13% drop coming in the future. And that's what was concerning, as a lot of things are pointing to a really bad third quarter, and something we've talked about. That is a very strong possibility, and I feel like would be the bottom of this quote unquote recession that we're in. I think we're actually in a depression, considering the current state that we've been in for a while. We've just getting used to it, and when you slowly raise the temperature of the water, you get conditioned to what you're in. I think with the pumping of the brakes with the Fed and the administration and the story that they're painting, it kind of lets you accept the fact that you are in a recession. And they come and say later on that, yeah, we've been in a recession for a while, when in fact it's actually been a depression. Which I think we are. And it's not just a U.S. problem, right? It's a global issue. We're in a global depression, in my opinion. But we'll see what happens. I think, again, it's going to get worse. But then I think we will find a pivot this year. And I think we are close. This is what I've been talking about, the final stage. We are just waiting for more things to break. I think at this point, obviously, we need to get over the debt ceiling stuff, which they'll write it as close to the first as they can. So I wouldn't be surprised if we're still talking about this by late next week. But nonetheless, we will see what happens. Again, the biggest problem there being, I think, we could default, and it's a possibility. It's very, very rare that it happens, and it'd be extremely bad for the U.S. Considering we're the world currency. So this is why I don't think we're going to default. But with that being said, again, it doesn't mean that we can't get downgraded, which is a strong possibility. If that does happen, that could crash the market alone. So with that being said, we will see what happens in the next coming days. Again, we have a lot more Fed speakers throughout the week. They'll be able to move the market. We do have the panel on Friday with Powell. So again, whenever he speaks, you want to be listening. Especially when it's open forum. He may answer questions and he may slip. He's been very good about not slipping, as we are still waiting for those FOMC meeting notes for next week, as those will potentially provide us insight into what's going on, what's really going on. And we've heard about mild recession in the last notes, even though they didn't want to talk about it. Again, same thing going on with his past monetary policy. Powell didn't really want to talk about it. He said to just watch the notes. So that means that there's going to be probably a lot of talk about recession, probably actually point that we are in a recession right now, and they'll quote unquote say it's a mild recession. Again, there's no such thing as a mild recession. I could see us more layoffs, which has been surprising that there hasn't been, especially when regional banks start going under. Then you're going to start affecting small business, and that's going to be the issue. So with that being said, we still got a long week ahead. It is only Tuesday, so we'll see what happens coming up. But let's look at some technicals. As we've talked about, we haven't broken up over 4,200, and we're still holding between the 40.59. We've been extremely tight over the past couple of days. So almost expecting something to happen potentially this week. I'm kind of just waiting, like I said, on news. If a news event drops, could be the one thing. We don't know what that news event's going to be. Again, I think it's a recession. People want to say it's priced in. I do not think it's priced in. I think there are some particular stocks that have been hit hard, really hard, like tech in particular has been hit really hard. So if we do start to crash, it'd be interesting to watch to see how far tech really falls. Where you have some other major ones like banks could potentially sell more. You got a lot of value that is holding a lot of weight that could potentially crash as well. But overall, when there's fear in the market, everything pretty much crashes at that point. So, and I think that's where we're headed. Nonetheless, we'll price in a recession and go from there. So that's what we're looking for in the SPX. Again, more Fed talking tomorrow. Nothing real major coming out tomorrow that's going to change anything. So we'll see. Like I said, it's a pretty quiet week in general. Bitcoin is continuing to sell off a little bit more, sitting around the 26K mark, just under 27K. See if this thing can get back down to 24K. I think is a very strong possibility, and even lower, again, just depending on the market sentiment in general. So we'll see there. Take a look at the bonds again real quick. There's been a lot of consolidation in the bonds, and this is what it's the foundation, what everything's based off of. So people don't really know how the bonds work, but the biggest thing is to understand is the volatility in which the bonds essentially move, or what's going on. So you can expect, though, when the Feds do start cutting rates, when they start lowering rates, this thing explodes. When they start adding rates, it sells off more. This is why there's been a lot of positioning to the upside in bonds because of that fact that they're expecting a cut soon. Because if you get a pause, then a cut should be shortly thereafter. But we've seen that people can hold a pause for a long time before things start to break, before they start cutting. And that's what I'm saying. Even though we move to the second stage of pausing, you need a big catalyst to cause Powell to step in and say, okay, well, we probably need to start cutting rates at this point. And considering he just raised again, whether you want to say that as his ego that he raised, I don't think it was his ego. I think he's trying to potentially speed up this process because it's probably taking a little bit longer than he would like. As he is seeing inflation coming down, we'll see on the next report. We do have another core inflation report before that next monetary policy. So we'll see what happens then, and then be able to determine from that point. So, and then again, it all depends what happens between now and then, because a lot can change between now and then as well. So they can change the sentiment in the market very quickly, and you could have a cascading amount of bank failures in the regionals, and then that could be big enough panic. But we don't know. Those things you're aware of, but you don't know when they're going to happen or if they even happen. So we will wait and see from here. So let's take a look at Tesla. Tesla has shown some weakness for the most part. We'll see what happens. Again, they had investor meeting today. That's why we had a bit of a pop. But we'll see what happens. We'll see if we can hold the 165. Like I said, if not, I think this thing could go lower. I'm still looking at that 140. Again, if the market does start to crash, whatever happens, if we start pricing in a recession, I think it would be quick. So this is my whole thesis on it. Well, the way everything is, I think the bears and the bulls are right in an extent. I can see why people are trying to position themselves to the upside, because I think if there is a crash, I think it could be big and catastrophic, but I think it will be very quick, meaning that we could start selling pretty heavy for potentially like 2 weeks. And then on that third week, we start recovering, I think is a strong possibility, and potentially start recovering. That's not saying the economy will recover. The economy will take years to recover. I think next year is going to could be a potentially bullish type of year, especially going into election year. I think is going to be important. So Tesla, again, really watching the 165. If it can hold that, it will make me believe that potentially this may be the bottom for now until we get some sort of news. We might just play this range between there and 180, but we'll see what happens moving forward, like I said. So Palantir, again, still very high. I think this thing is still going to fill the gap and at least get back down to those 775. Potentially could start consolidating here again around the 745. until whatever that move is. Again, if we have a crash, I think we're at least coming down to there. Could have a brief stop here at the 620, and then potentially rocket out of there. But we'll see. Like I said, we'll see. There's a lot of possibilities or potential things that could happen from there. EA, again, same old song and dance. 220, 195 are the levels we were watching on there. JPM, again, still showing weakness. It's trying to hold this 135, but I still think it's coming down to the 125 to fill this gap. Attempted to do it once, but got bought up. I think that was more so because of earnings mode that kind of held this thing up. But it's officially kind of getting out of earnings mode. So I see this thing dying back down to there. And ultimately, maybe again, the 110. Again, if everything wants to start selling and we get in panic mode for a recession, this is where the meat of your move is going to come from. If you're looking at ones that haven't really pulled back, and the same could be said about BA, right? You're looking for the meat of the moves, the ones that have been overextended for a long period of time, like JPM and BA, really kind of held up the market when tech was down for so long. Now that tech has kind of recovered and showed some strength. Now everything could potentially roll over. So you got JPM, you got BA, you got Apple, all pretty much looking the same. So when is that next move going to happen? Again, when all industries look the same, you're looking for a correction to the downside, typically is what happens. So that's what I'm looking for, whether it's a healthy pullback or whether it's actually pricing in recession, a crash, whatever the case is. We will see. Again, we deal in probabilities. There's a high probability there's more downside than there is upside. But once we get that last piece of the downside in, whether it's pricing in recession, we could move from that point. So with that being said, if you made this far, I do appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.